afternoon, everybody. Welcome to your TraderMerlin show. It is a Tuesday afternoon, Trivia Tuesday. Up late last night doing all my trivia rounds. I got some good ones for tonight's trivia contest. One day I'm going to just do a trivia show for you guys. So good morning, good afternoon. Tom says, is that AI's idea of brains on the outside of the head, or is that like circus peanut candy? Yeah, that's the graphic for today. It was a strange one, I know. It's kind of a weird one. I wanted like questions and thinking, and that's the graphic I got for today. So kind of a strange one. And the result of today's show, or today's topic, will be driven by Q&A. So I've received a bunch of stuff that's crypto related, and what I didn't want to do over the past couple weeks is really just make every show about crypto. I'll sprinkle in a little bit, but today is going to be predominantly about digital assets and cryptocurrency, because I'm going to try to get through about 10 questions that have come through that pertain to different topics that some of you may be interested in. And of course, if you have something that you would like to discuss, something that confuses you, you're not sure of, want to know more about, then just type it in the chat, and I will get to that as we progress through today. And then at the end of this, we'll go over what's going on in our markets and obviously the continued pullback in the crypto space, but that was to be expected after such a big rally. Okay. If you did see it, Steve says, I think I saw the picture in a D&D monster manual. It might have been, although this is all AI generated, so it was off of my prompts. This is original artwork created by yours truly. Okay, let me start off with our first question, which some of the stuff I've already covered, but I'll do it briefly just to get anybody here who might not know the answer to these questions up to speed. First one I got is from Michael. He says, what's the best way to get started with crypto? Well, this is an easy one. The first thing to do is educate yourself. I have never in my entire trading and investing career seen as many scams and fraudulent offers and things as there are in cryptocurrency. Not only are the projects themselves in many cases frauds, but what's happening now because of AI, and I'll show you here in a second. Actually, I don't have that prepared. There are AI fakes of celebrities offering all sorts of free things, and they're scams. So for example, yesterday there was a video of Michael Saylor. Some of you may have seen this. So he was on a podcast a while back. Someone had taken the podcast, ran the audio through AI, and output Michael Saylor saying, and his facial expressions match the talk track. You know, I've shown you this stuff with the Bukele speech, the president of Argentina, when he was at the World Economic Forum. Someone had taken his speech, put it into an AI program that translated into English, and it looked perfect. It looked like Bukele could actually speak perfect English. In the Michael Saylor one, they type in a script that has Michael Saylor saying, you know, because we want to promote the Bitcoin community and get it to grow, we're giving away free Bitcoin, but you have to scan that QR code only during this talk that I'm doing here today. After that, it's not going to be valid, so it's urgent that you do it now. And in this QR code, whatever you send in there, we'll match it. So if you send 1 Bitcoin, we'll send you 2. And it sounds exactly like Michael Saylor. It is Michael Saylor, just someone has used AI and modified his vision. So here's the truth of it all. You got to know your scams up front. The biggest one I see is, number 1, fake celebrities and fake giveaways. Number 2 is what's called the pig slaughter, which is where people claim you're going to make ungodly amounts of money in a very short window of time. You deposit a little bit of crypto, and then you take it out. And you're like, oh my gosh, I made 100% in a week. And then you deposit more money. And next thing you know, you've put in $100,000+ and you get nothing out of it. You're not going to get 100% rates of return per month. It's just not going to happen, guys. Everybody here should be smart enough to know that that's a scam. So understand that, number 1, celebrities are typically being AI faked to promote things. Nothing's going to be given away to you for free unless it's an airdrop for a specific project, which is a much more complex topic. But no one's going to give you Bitcoin. No one's going to give you Ethereum. No one's just going to plop Avalanche or Solana in your lap for free anymore. It just doesn't work that way. So educate yourself and understand that there's 2 paths you can take with this. You can take the path that a lot of new traders take, which is the gamble route, and they're all into meme coins looking for high flyers, trying to make a bunch of money really quick. Or there's the path that I choose, which is understand the technology, see where this technology impacts and benefits society, and then find projects in the crypto arena that tailor to, I guess, areas that need to be revolutionized, areas that need change, like the banking system needs to be changed, streaming media needs to be changed, hosting of data needs to be changed. There's targeted projects specifically for that actually have community, developers, code, and they're actually doing something. That's the route I choose to go down. So I don't typically entertain anybody's comments about, these shit coins like Pepe or Shiba Inu or meme coins and Bonk and all that garbage. Fine, good for you, that's good, but it's not going to be a long-term growth thing for you. So I said the best way to get started in crypto is, number one, understand the risks. I think that personally you are more at risk of getting into crypto than any other asset class out there because it's so new and people just don't know what they don't know. So from there, now we really start to think about the way we buy crypto. So once you start to understand it and you find out what you're interested in, and I know I've mentioned many different topics here, and of course, if you guys have anything that you want specifically me to address, I'm always happy to do that. But I've got a portfolio built of things that I think are quote-unquote game changers. And I don't know if they're all going to succeed, but I've done the research and I know that the probability of them failing against the whole of crypto is much lower, right? That their probability of success is much higher. So do your research, understand the projects, know the components to look for. I'm looking for transactions per second. I'm looking for community. I'm looking for bright ideas. I'm looking for codependent systems, meaning Ethereum is a codependent system. Every other project built on Ethereum gives Ethereum more value because it is now needed to keep all those other projects alive. Once you figure that out, and you say, this is the 1 or 2 or 5 or 10 or 50 that I want to buy, then you can take that next step as to where's the best place. Now, I'm kind of biased here because I'm in the United States, so my information is limited to the United States markets. As of right now, I would say that your 2 best choices are going to be Coinbase or Kraken to buy cryptos at. Now, with that, you need to understand that if you buy cryptocurrencies from these exchanges, there's typically a basic platform and an advanced platform. You're probably going to pay an extra 2 to 10% more per transaction by using their basic platform. So you should always use the advanced one. If you don't know how to use it, watch some videos, some tutorials, and that'll help you out. So now we've gotten you through understanding crypto. You realize that most of it's a scam. You're going to get through that garbage. You find the ones that you want to buy. You know why you're buying them. And then you go to the exchanges and you buy it. So from that point, you have a couple choices as well. Once we've finally gone through enough of the weeds to find something we want and we've purchased it, now it's a question of where do you store it? At that point, you should be thinking about self-custody, which is where you put it on a device, like I've mentioned here many times, like this Nano Ledger. It's a little USB device. This keeps your cryptocurrency in your possession. For anyone who's been in the crypto space for a few years now, you know how risky this is. You had Celsius, Voyager, BlockFi all go bankrupt. You had Terra Luna, 3 Arrows Capital, both go under. These were huge storage places for people to keep their crypto and maybe make a little extra money. Just like Crypto.com. If you keep your cryptocurrency at Crypto.com, it sounds great because you could make an extra 2, 3, 5% per year. However, if they go bankrupt, you're going to lose almost all your crypto. You might get something back, but you'll mostly lose it all. So I recommend once you find something that you wanted to buy, you make that transaction using the advanced platforms, then you move it to self-custody and you do everything in your power to protect that private key, which is your access to all that crypto. So Michael, I think I went way too long in explaining your best way to get started in crypto, right? There's a lot of different components and factors to look at with regards to answering that question. So hopefully I answered a little bit. Again, you can always feel free to comment down below the YouTube channel if you're not watching live, or just email me at TraderMerlin@gmail.com for more detailed information if you would like. Brandon says, where is one of the best places to go buy Bitcoin to get the best fill and then store it on your ledger? Coinbase. So there's a couple factors you need to think about here, Brandon, when you're looking at buying Bitcoin. When you go to buy a share of Apple, you never think about really the liquidity of Apple. It's one of the biggest companies in the world. It's going to have plenty of liquidity, meaning I could buy 1,000 shares if I want and not move the market. That's because the NASDAQ is centralized, right? You got one entity where all the transactions happen. Well, there are, dark pools and stuff like that, but for the most part, it all happens in one place. So when E-Trade gets their quote and Schwab gets their quote, it's from the same pool of liquidity. With crypto, it's very different. You have Coinbase has their own liquidity pool. Kraken has their own liquidity pool. Binance and Gemini. Those are 4 completely separate. Think of it like a swimming pool with water in it. The water being the amount of Bitcoin that you can buy and sell. On some pools, it's very low. Other pools, it's very high. Now, to be honest, for Bitcoin, it's pretty high on most of the pools because it's the most popular one out there. But if you go to something kind of random, let's say SWI, right? SWI is kind of an up-and-coming one. The transactional volume on each one of those exchanges is going to be significantly different. And therefore, it's really important to check and see which one has the most liquidity. But for Bitcoin, I would go Coinbase, and I would use their advanced platform. If you don't know how to discern basic versus advanced brand, let me know, and I'll show you with a visual example. So here says, what kind of risk is associated with staking from cloud-based wallets such as Exodus? Good question. So when you're staking from a wallet like Exodus or Trust Wallet, in those devices, you actually have your private key. So you keep your private key, which means it's technically yours. However, when you stake something, so let's say you've got Ethereum or Cardano or Avalanche and you want to stake that. Okay, you go through your device, you go through the procedures, and you stake by clicking certain buttons and finding your validators and saying, I want to put my crypto with this validator. If that validator messes up and does something bad, they could get called what's called slashed. When a validator gets slashed, they could lose some or all of those crypto holdings. And remember, your crypto is with them. You've locked it into their validator node. So the risk there is that you choose the wrong validator, or that your validator does something nefarious and the network punishes them through slashing. Be honest, I haven't seen it. I've never been a part of it, knock on wood, where my crypto has been slashed. So that's your big risk there. The number one risk said here is that you lose your private key. If you lose your seed phrase or your private key, all is lost, game over, nothing you can do about it, 100% gone. Okay? All right, so Michael's, what was the best way to get started in crypto? We answered that one. Next on my list was, what are my thoughts on Avalanche? Okay, so this is a bit more complex, and for those that are interested, dive in the chat here and ask me questions about this, because this opens up a whole different can of worms. In the crypto world, there are millions of projects. I'm not exaggerating, millions. And out of those millions, there's probably maybe 1,000 that are like really got a good community following code and they're building something legitimate. Maybe a little bit more than that. Out of that, I don't know who's going to succeed. And if you look back at the parallel to the .com bubble, you had tens of thousands of companies. Well, we had tens of thousands, but you had thousands of companies trying to be this .com juggernaut. And at the time, nobody knew who was going to be the juggernaut. We didn't know who was going to come out of this a winner. I thought that we'd have a revolutionary change with regards to the .com era, but I didn't know which one would lead. I certainly didn't think it was going to be Amazon. You couldn't have paid me to say that Amazon was going to be the winner there. So a decade later, we had consolidation, we had failures, we had successes, and out of that rose some of the most successful companies we've ever seen in the financial markets. And I think crypto will do that same thing. What you have to look for is the different categories. So what you're asking here, life on your terms. Oh wait, this wasn't life on your terms. I forgot to change the name, sorry. Forgot the gentleman that asked this one. What's your name? Thoughts on Avalanche? Understand first, what is Avalanche to begin with? So what we have are what are called layer ones. A layer one is like the foundational piece of a network. And what I mean by that is, if we look at Avalanche, it's a blockchain. It just functions very similar to how Ethereum and Cardano and Solana, it just uses slightly different mechanisms to achieve the same end goal, which is, I know that there's X amount of Avalanche tokens in existence, and I know where they all are right now, right? So that's the main rules of a blockchain. The blockchain should understand where is every one of our cryptocurrencies at, right? It's a transparent ledger. Where is everything at? We cannot screw that up. If we screw up that, the whole thing falls apart. So number one is, where is everything at? Record keeping, right? Number two is making sure that layer one blockchain and all that data structure is bulletproof, that you can't get in there and hack it, modify it. Got to protect that. So that's really what a layer one does. A layer one also, remember the job is twofold: protect the network and keep track of all the data. That's their job. But they also open it up so you can program onto that blockchain. So think of Think of it like this. You guys know those long power strips? It's like it looks like just a giant bar, and they got different plugs like every 6 inches. Think of one that's like 8 feet long. And you plug that in the wall. That gets you all the power. That's all the power for anything that you plug into it. But I can take a power drill and I can plug it into that power strip, and it now survives because of that power strip. If I unplug that power strip, everything that's plugged into it dies. Think of Avalanche and Solana and Cardano like that. They offer that power strip of infrastructure that these projects can build on top of. So you get this codependency on these layer ones, which is why I think it's critical for anybody here who's kind of a longer term investor to look at layer ones and say, which one do I buy? And I could run a list for you. Ethereum is the number one by far at this moment, but way too expensive. You've got Solana, Avalanche, Algorand, Cardano, Sui, Aptos, the Hedera Hashgraph. You have all types of different ones, and I don't know which one's going to be the leader in 10 years. I do own Avalanche. Actually, all my Avalanche is gone now because of what happened with Celsius. I did own it before, but now it got taken away. So I don't own any Avalanche right now. But Solana is now my number 3 holding. Avalanche is my number 2 holding. I have a very small amount of Cardano because most of it got taken away with the Celsius problem. But I think that level ones are important. And that's your question, is what do I think of Avalanche? Well, a couple of different things I just mentioned there. So let's go to this one here. And what I want to do is talk about just a few different layer 1 projects so you guys understand the differences between them. So Ethereum is the original OG, right? And Ethereum does about 15 transactions per second, and its block time is 15 seconds. So it's fairly quick compared to Bitcoin. Bitcoin is 10 minutes, so Ethereum is exponentially faster than Bitcoin. However, Ethereum only does 15 transactions per second. That's not a lot. So when we add on something like Avalanche, it's night and day better than Ethereum. And you can just look at the numbers there. It does 4,500 transactions per second, which is more than Visa does on average in a 24-hour window of time. Visa does 2,400, if I'm not mistaken, transactions per second. And it's a globally used instrument. So this is fantastic. It does 4,500. And its block time is 2 seconds. So at face value, you would think that Avalanche is a better buy right now. And it might be. However, Ethereum has the market share. It has the network effect. It's the OG. It's got the huge market share. What we're witnessing now is because Ethereum is so slow and they're not fixing it fast enough, you're getting outflows from Ethereum moving into projects like Avalanche and Solana are probably the 2 more popular ones right now. So I like Avalanche. I like what they're doing. It seems to be an attractive hub for gaming protocols, meaning more games are being written on Avalanche, which is great. You want to have more community working on your layer 1 project. But what are some of the other ones look like? Well, if we look at Solana does 65,000 transactions per second. And to be fair, we don't actually know that it does that. That's what they say in a test environment. Anytime it's gone over 65,000, the network has shut down. So I personally don't think that it can handle on an open network 65,000 transactions per second, but it can handle 30 or 40, sure. Which is more than enough, in my opinion, to suffice all the needs for global demand. But notice the block time, right? Solana block time is 400 milliseconds, so it's half a second. But it takes about 2 to 4 seconds to get finality, meaning the transaction is complete and done. So now we look at these 3 and you say, well, heck, got to go with Solana, right? That's why Solana is my number 3 holding. And then you have crowd favorites, which I do like Cardano. Cardano is slower than Ethereum. It's 20-second block time. However, they can do 1,000 transactions per second. And they're working on scalable solutions, one called Hydra. So at surface value, if I were to look at these 4 projects and say which one is the best layer 1, knowing only this, the choice is easy. It's Solana. With hands down, only this. However, Solana is somewhat centralized. They have issues with their network going down, and that offers some fundamental problems to me. You've got on paper here, it looks fantastic, but Solana does have issues. Centralization being the main one, and also the fact that it can get shut down, that it gets bogged down sometimes. And one thing I did not put on here is commissions, fees. Solana is extremely cheap. Ethereum, extremely expensive. So there are things that may shift your thought track here. I would encourage you, if you are getting into this space, don't hang your hat on one project and say, oh, it's got to be Solana or it's got to be Cardano. I would spread the investment around a little bit and target a couple different projects just to balance it out. If you went all in on pets.com in 1999 thinking this is the greatest thing because it's a .com company, well, you lost everything because they went under. If you bought some pets.com and you bought some Exodus and you bought some Infosys and you bought some Amazon, 3 of those 4 projects failed. But the one that succeeded erased all those losses and gave you an exponential return. So I'm a big fan of building a portfolio out. I think that all 4 of these have potential. I really do. Ethereum is working on upgrades that in a couple of years, they're expecting it to shift a little bit with regards to their numbers, and they're looking at having 150,000 transactions per second, but they're nowhere near that right now. Okay? Oh, Brandon, thank you very much, my friend. I appreciate that. So let's see. Tom says, I guess I see no reason to start with only Bitcoin, and I'm okay with paying a small fee to avoid being self-custodian and the potential loss of a private key or seed phrase. Also, there was a problem of sending crypto to the wrong address. Yes. So great points there, Tom. Let me clarify some of those. So what Tom's saying is you have the choice of keeping your crypto on, let's say, Coinbase, and they're going to take care of everything, and in theory, it should be secure. If you're somebody who doesn't want the stress of making sure you have your seed phrases safe and secure and your private keys, because you are now your own security officer, right? And it's a big pill to swallow. You are the gatekeeper to all your security. Where you keep that seed phrase is important. How you keep it's important. How you write it down is important. I mean, all that stuff is a pain in the butt for a lot of people. And I think Tom's saying, I don't want to deal with that garbage. I'll fine to let it stay over at Coinbase. Here's another little bonus feature here. When you have these 4 U.S. exchanges, you've got Binance, Kraken, Gemini, and Coinbase. Only one of those is publicly traded. So I am not paid or promoted by anybody. So let's just make that clear. But if I had to choose out of those 4 exchanges, which one I would feel the safest with, it's Coinbase. For a couple of reasons. Number one is Coinbase is the only publicly traded exchange in the United States, which means that they're under far more scrutiny from regulators than any of the other ones. So right away, if I plan on keeping my crypto on an exchange, Coinbase is the place to go. Correct me if I'm wrong. Anybody disagree with that? Go for it. Coinbase also has hundreds of millions of dollars of funding from major financial firms like BlackRock and Goldman Sachs and Circle and many other firms. So I'm pretty sure that they're going to be the one to stick around and be solvent and make it. So I would go there. And yeah, sending to the wrong address is usually not a problem. What you should never do, ever, if you guys are getting in this space, never type in an address. It's always copy the address, paste the address, and then make sure you read the first 3 or 4 digits and the last 4 digits and make sure that those are okay. If those match, then you're fine. But you're right, Tom. It's scary and a pain in the butt sometimes to keep all these seed phrases and yeah, that's about pain. All right, next question. I answered this yesterday, came in last night, but I'll repeat it. Does the new generation of NVIDIA chips threaten cryptocurrency? Yes and no. So the main point I made yesterday is we have all these encryption algorithms. Every project is going to be different. The main one that Bitcoin uses is called SHA-256. There is the belief that at a certain point quantum computing will be able to crack SHA-256, which will render Bitcoin absolutely useless, right? If SHA-256 gets hacked, then Bitcoin will go to zero overnight. It would be zero overnight. There's no value in it because it's all about the encryption. If quantum computing or this new NVIDIA chips even threatens that, the community, I'm sure of it, will upgrade from SHA-256 to SHA-512 and just double the level of encryption, making it impossible. And they'll keep increasing that encryption level to accommodate for the new technology coming in. So I'm not concerned about that at all. I think that the networks will adapt to the greater computing and processing power. So there we go. Eric says, I accidentally sent a meme coin to my Ethereum address back in the day because I didn't know that it was going. Didn't know it was when you lost 20 grand. Well, the good news, Eric, is if you sent the meme coin to your Ethereum address, you can still access it. So I may be able to save you 20 grand here. As long as you have the address that you sent it to for that Ethereum wallet, you can get it back. Totally. Remember, that meme coin is probably built on Ethereum. So it's an Ethereum token, an ERC20 token. If something is an ERC20 token and you send it to your Ethereum wallet, you own it, right? It's just sitting on your Ethereum wallet. So if you have the seed phrase or your private keys, you can access that, Eric. So you can email me if you want, and we can try to retrieve that 20 grand, although I'm getting a finder's fee. No, I'm kidding. Always a good idea to start by sending just a small amount of crypto. Yeah, Liz, that's a really good point. In the class I teach for Trading Academy, it's one of the first things I talk about in the 5-step transaction process. If you ever send crypto and you're nervous about it, let's say, I did a live transaction for my students. It was pretty funny. I showed them, I sent $100,000 worth of Ethereum, not paper money like a lot of traders use, but this is real money. I sent 100 grand from my, I think it was my Coinbase to my Ledger. I forgot where it was, but one place to another. And first thing I did is I'm never going to send all that at once. I would never send $100,000 at once, first transaction. I sent $15 worth of Ethereum. And the funny part is I did this live in front of students. And the first transaction, I sent, $15 worth. And it took about 2-3 minutes to get there. And as soon as I realized it showed up on my ledger, everything was safe, then I just repeated the exact same transaction again for the rest of it. Well, for some reason, the second half of the transaction took like 45 minutes, and I was sweating. I was like, oh my God, are you kidding me? I just threw away $100,000. Those type of things make you very nervous, but Liz is absolutely right. Start with a small little bit. It's worth paying the commissions on it just to make sure you're right, because if you send it to the wrong address, it's gone forever. You can't knock on it and call them up and say, hey, sorry about that. You can't do this with the bank. You could send, deposit money in someone's account by accident. You can call the bank and the bank will say, no problem. We'll take that out and reverse those for you. I made a mistake. It doesn't work with crypto. Can't do that. Cindy here says, if Bitcoin is stored in Coinbase wallet, does they get protection from FDIC like cash deposits in banks? No, because the cash is cash. When you look at FDIC, that's on cash only, right? And that's for FDIC insured banks. Not all banks are FDIC insured. If they're not FDIC insured, you should run. We could get SIPC insurance. However, the S in security stands for, or the S in SIPC stands for security. Right now, the argument is that these aren't securities. So if Ethereum gets labeled as a security, it's going to be required to meet certain financial hurdles set by the SEC. It's going to have to qualify for these certain rules. And if they do, then it will be considered a security, and then it might get SIPC insurance. But right now, nothing is insured. None of it. That's what makes it very scary. I look at the amount of crypto I've lost. The amount I lost at Celsius and Voyager, if I was to take those losses and look at the value of that money now, you're talking 8x. I would have made 8 times what I lost already based off the last rally. Crazy. The government must audit institutions that are insured. Correct. Okay, so I got Trent's question on cryptocurrency. All right, so here's another one. Arvin, I hope you're watching. You posted this one on YouTube, I believe. No, you emailed my TraderMerlin website. He says, please provide feedback on Elon Musk's crypto offer. Is it a good deal? Are you taking advantage of Elon's offer? I don't understand how to take advantage. I have never purchased Bitcoin. If it's a good deal, would you please explain how to take advantage of it? It is a scam. Let me repeat this on camera. It is a scam. If I had to zoom thing, I would be going like this because it is a scam. Elon Musk is not giving away crypto. Again, people are doing deep fakes with AI of their voices saying in perfect Elon Musk tones, if you send me Bitcoin, I'll give you more of whatever. It's not going to happen. Don't be that vulnerable. It's not a good deal, Arvin. You will lose every single cent you send to this offer. It's not Elon Musk. Elon Musk is not going to steal your crypto. He's not going to give you crypto either. You're not going to send him any crypto. You're not going to send it to Michael Saylor. You're not going to send it to. You're not going to send 1 Ethereum to anyone and get 2 Ethereum back. It's not going to happen. It's a scam. Done. Do you check your cold wallet regularly to make sure the cryptos are there? Yes, I do. Yep, I do. and if, Ivan, if they weren't there, what am I going to do? What I would do is look and see where they were sent, like how did they get removed and where they went, and then, what are you going to call the FBI? Most people don't have that much crypto. I've got a pretty good amount, so I would probably go seek law enforcement officials to help out and find out where it went. But yes, I do check it fairly regularly. Yep. Tom says, in the case of a death, are there firms out there that can handle and liquidate crypto? Can you trust a firm or relative with your security? Great question, Tom. That's something I have no experience with, and knock on wood, I hope I never have to have experience with. When I got COVID the first time, I think I told you guys, I was like resigned to death. I thought this is it. After reading all the media news hype that went around COVID, I was like, I'm going to die. And I just sat in bed and I wrote out my will, and I have different instructions on how to access my accounts for whoever should open my will and get that will. In that, I also don't have my seed phrases written out in their entirety. I have kind of word games being played and other tools in place so that if someone did find my will, they can't just go and access my storage devices and take all the crypto out. They'd have to know the other components. So I'm doing my best to conceal it, because think about it, if I have a will and it has my seed phrase to my ledger, then somebody could get all my crypto, snap of the fingers, gone, disappear. So I want to make sure that whoever actually gets my will knows the answers to. There's blank spaces in the will, and they need to fill those in with only things that only they would know. So yeah, I don't know if there's firms out there. Again, if you gave your seed phrase to your lawyer to take care of, your lawyer would now have your seed phrase, and you got to trust your lawyer. I sense chuckling going on in the crowd right now. Trust your lawyer. Yeah, so I don't know. I have a method to how I've done it, and one thing I did is I built a spreadsheet. Let me see if I can show this to you guys. It's pretty cool. I can't send it to you. It's only for my crypto students, but let me. I'll show it to you. I think this is it. Hold on. Yeah, so one of the issues I had was my crypto was all over the place. It was just scattered, and to keep track of it, I built this spreadsheet. And basically, what you do is you type in the cryptos that you own, and it will. And let's just go Bitcoin. Let's say 64. All right. There you go. I'll just do those two. And when you go to the portfolio, I have everything in dark gray you can fill in. Everything in red you don't touch. It automatically changes the names when you fill out that table on the previous page. But what it does, it breaks down this pie chart and lets you know kind of, oh, here's what you own of what different asset class. So not only does it show me what I own, but notice on the left-hand side over here, I have written down, and this is old, I have a lot more than this, I have over here all the different places that I've kept crypto over the years. So I might have some over at Celsius or some at Kraken, or maybe have some, let's say I have some Solana at Edge Wallet, all right? All right, you type that in there, and then you just kind of at least know where everything is at. And that's one tool that I've used to help me over the years. But what I've done is I've really started to consolidate this down. I'm really moving mine to one of 3 places. Well, 4. I keep a little bit on exchanges like Celsius, Coinbase, Kraken, Gemini, Binance, just a little bit, a few thousand on each one of those. But most of mine's going to my ledgers. I also have some on paper wallets, basically Bitcoin. I have several Bitcoin on paper wallets, and that's it. Ledger, paper wallet, and then exchange is kind of the main places I keep it. But this is how I keep track of it all. And then the seed phrases to access those specific accounts is in the will with little games that are played with only the beneficiary of that will would understand. So that's how I'm doing it. Joe says, tell the scammer to send you 1 Bitcoin so they don't have to send you your own Bitcoin back. I don't like when people send me crypto. It makes me nervous. I don't need anything. I mean, I love the contributions to the show every now and again, but you guys don't need to send Bitcoin. Don't need to do that. Just think that if it sounds too good to be true, if something's going to be free, then it's probably a scam. It's amazing how these people prey off your greed, or our greed, because I'm in that category as well, but I know better than to participate in any of those scams. All right, so Arvin, I answered that question for you. Here's a threefer. This was Mark sent this one in a week ago or so. He says, is there currently a way to borrow against a crypto account? Celsius and BlockFi were mentioned on the web, but those are no longer options. If this idea doesn't currently exist, do you see this as a future possibility? It does exist. So there are several different things that you can do. Number one is let's run through the choices here. Number one is you would go and stake it directly. So, for example, I have Solana and Ethereum, and I am currently staking those on those specific networks, and I'm earning yield. I think I'm getting 3.8% for my Ethereum. I think I'm getting 8% on my Solana. I'm getting 14% on my Polkadot, and a variety of other rates of return. Staking is probably the safer way to go as long as you self-stake it because you are in control of your private keys. Number two choice would be to use a site that offers rates of return. Essentially what it is, it's a lending protocol. Well, so one second, let me clear PETO. So that would be something like, and again, I'm going to make it very clear, I am not endorsing or supporting Crypto.com. I'm just using this as an example. Crypto.com right here, you go up here to products, and you can see that there is multiple. Crypto Earn over here. So you click on Crypto Earn, and let's say you've got some Bitcoin. You could earn up to 5% per year. With Ethereum, 5.5% per year. And let's just see what the Ethereum current rate is. Let's go here, and let's do Bitcoin, since Bitcoin is one that you can't stake. So let's say you got $50,000 worth of Bitcoin, and you have none of their native tokens, right? Which is CRO. They incentivize you to use their CRO token, and you get better rates of return. And let's say I lock this up for 3 months. Well, I could be earning 1.56%, which means I'd make roughly $780 for the year if I put my $50,000 worth of Bitcoin there. So I'm earning interest. Now, watch the change here if I add more CRO tokens. I actually do have more than 40,000 CRO tokens. So now you get 3.95%, which now brings you almost $2,000 per year in interest on your $50,000 of the Bitcoin. This sounds great. I'll tell you, it sounded great for Celsius, and it sounded great for Voyager, and it sounded great for BlockFi as well. So with that, what you end up with is the dilemma. How are they paying me 3.95% on Bitcoin when Bitcoin does not have a rewards incentive mechanism? Staking rewards are built into the protocol. That's okay. You have a predetermined rate of return built into the code. For example, Tom here says 14% return on Polkadot is not too good to be true. I am naive, but nature, yeah. What it means is that there's 14% more Polkadot being created every year. And that's technically not good, but that rate of return is coming from the protocol itself. It's not like they're going out and manufacturing and trying to find ways to earn 14%. What happens is Polkadot started with an X amount of tokens in reserve that's just sitting in a pool, and they're saying these will be released over time to the tune of 14% just to people who are staking our cryptocurrency. So they incentivize you to stake by getting that 14%. And what happens is over the years, that rate will get cut smaller and smaller and smaller until they have network adoption of their network. And it's not just Polkadot that does that. Almost all projects that are proof of stake technology do that type of scalability. So it does sound pretty too good to be true. What does Bitcoin CM mean? I don't know. I'm not sure. I know that there's like 100 different Bitcoins, Bitcoin Gold and Bitcoin SV. There's a bunch of different ones. So I'm not sure exactly which Bitcoin CM is. Let me look at it in a second. So to answer Mark's question, this is one way you can do it using protocols. The other way you could do it is by using DeFi marketplaces. That would be something like, that was my lesson today for my focus group for OTA, was liquidity pools like this. So you can use Aave. It wouldn't let me connect my wallet earlier. Let's see here. Yeah, it's got an error. You can go into Aave and you can stake your cryptocurrencies. There's different ones you can stake. So this is their native GHO. But you can go here to markets, and I could supply, meaning I could lock in. And this is DeFi. This is different than what you're dealing with like Crypto.com. So here, I have to do ERC20 based tokens. So I can't do Bitcoin, I have to do wrapped Bitcoin. But you see here, if you supply Bitcoin, they'll only pay you 0.07%. And if you borrow it, you'd have to pay 0.91%. So these are places where you can do DeFi lending. There's other ones. Let's see. Aave was a big one. Curve is another one. But there's a lot of DeFi marketplaces where you can earn a rate of return. It's not by staking. You're literally lending it out. One of the nice security measures they put in place for these lending protocols is a liquidation price. So let's say you deposit $100,000 worth of Ethereum and you're now earning 1.65%. When someone borrows that from Aave, they're paying 2.48%. In that contract, there's literally a price that says if Ethereum drops to here, they're liquidating the whole position. You're in theory, your crypto is safe because they have a mechanism in place that automatically prevents it from going past a certain point. So there's other places you can use to collateralize loans like Curve as well. So that's where you can get there as far as earning on your crypto and borrowing against it. You could deposit something and then borrow other cryptocurrencies as well. All right, let me see what else I got here. Let me go through questions real quick. Are seed phrases, when you start putting them in the system, protected by a number of attempts so that after 10 attempts, just like your iPhone, it shuts down and erases everything? On some devices, it does. Like, for example, if you put in the wrong code for your ledger 3 times, I think, it will lock you out, and you have to put in your seed phrase again. I don't think anything resets your seed phrase for you. It's usually password phrases. Let's see what else we got. Are you aware when the commercials come on, if you are able to pause talking, don't want to miss? I'm not sure, Carrie, if it happens to everybody at the same time. Sometimes I do see it. Other times I don't. This window that I have over here is a little bit off. But let me see. I'll keep it right here. And next time commercial comes on, I'll pause. I'm not going to make it too much longer. I'm already going way past my my allotted time. All right. Second question from Mark. What is your opinion on the increase in ETF ownership and the typical buy and hold mentality of the institutional investor versus the past retail investor, either muting or eliminating the 4-year cycle? If there is a change, what would be the best indicator to watch for to indicate that the historical 4-year trend may be altered or broken? So I actually think it's going to be more pronounced this time, Mark. And the reason is these 4-year cycles happen because of supply and demand changes. When the halving comes, which will happen next month, when the halving comes, the supply of Bitcoin slows down. It's going to go from 6.125 to 6.25 to 3.125. It gets cut in half. That means less supply. And if people still are demanding the Bitcoin ETF, then price is going to surge even higher because less is available. Less is coming on the marketplace. So I think that it's going to actually further exaggerate the curve because you have a factor we've never had before, which is adoption. If you go back to the first 4-year cycle, which is 2009 to 2013, there was nobody using Bitcoin. So it was this weird natural phenomenon that established itself. And the next cycle from 2013 to 2017, 2013 to 2017, still very few people using it. But it had that same pattern. And then from 2017 to 21, same pattern. And I think it's a natural phenomenon based off supply and demand. Now, I don't know why at the end of that 4-year cycle, it always falls 75 to 85%. That part I just don't quite understand. That part throws me off. But I think that this surge that will happen next year, it will be even bigger than the historical. Not the first one, that was 1,000,000%, but I think it'll be a huge run up this time as adoption is bigger. And in my opinion, I think we'll have greater clarity with regards to Bitcoin, its usage on the global scale. And I think more countries are going to start using it as a currency medium exchange. Let's see. Are companies such as this one any good at asset recovery, eyeball, cyber hack loss? Not that I know of. I don't know if those things actually work. I did see that someone had forgotten their seed phrase on the ledger, and someone had taken the ledger, bypassed the security mechanisms on the ledger, and gotten into it. But that was years ago, and from what I'm told, Ledger has fixed that little vulnerability because apparently you open up a ledger and it erases things. I don't know how it's all constructed inside this device, but I don't know about recovery. I hope I never, knock on wood, I never have to think about it or deal with anything like that. I don't want to lose mine, which is why I'm kind of consolidating my accounts down. When you look at this spreadsheet that I created, I had I had probably 30 different accounts at different firms because I was just testing everything out. I wanted to see who offers what are the services, features, functionality, selection, liquidity, all of that I was learning because I have this habit of when I do something, I want to be the best at it. And I've got stuff everywhere. And now what I want to do is get it down to just a handful. And I'm still migrating some assets around, some I'm having troubles with, but the less seed phrases, less security stuff I have to worry about, the better. All right, and the last question from Mark, and it's going to take us to an hour. Jeez Louise. When you move your Bitcoin on your birthday in 2025, probably might actually happen before that, is it possible to move your Bitcoin within your cold wallet ledger to a stable coin that would not create a taxable event? That's a great question. Fantastic question. In my mind, this action would be like moving money from my checking to my savings account and back. Since your crypto stays inside the same wallet, there would not be a concern about the gains that would need to be reported or taxed. Can you expand on this concept? Fantastic question, Mark. So your analogy is not quite right. What you're saying is if you're in your checking and you move to your savings, it's still US dollars or yen or whatever account you're using. So you're not changing the currency. If I convert from Bitcoin to anything else, anything, that's considered a transaction. And by law, that would be a taxable event. Now, I make this clear. I hope the IRS is watching. I will be reporting all my transactions because I want no problems with regulators. I want no problems with the Internal Revenue Service. Not at all. However, this is your discretion now. And this is what concerns regulators because on this device, how do they really know what's here? Could they track that you bought Bitcoin on Coinbase and sent it to some address? How do they know where that address is? Right? They don't. So it's a gray area. And if you wanted to save yourself a ton of money in taxes, you could convert your Bitcoin because on a ledger, you can convert into other cryptocurrencies. It uses a third-party website, and I'm not sure if there's limits. I would share that with you, but I don't want to bring up my ledger on this program. I just do that behind the Firewall at OTA. It's a tricky one. So you could sell all your Bitcoin and convert that to, let's say, USDC and go to a stable coin and just sit on that for a year and then buy back in. And I don't think the IRS is going to be any the wiser. Like they wouldn't know. At some point, I think it'll be a problem, but I don't want to push those buttons. I'm not. I got no problem. The IRS. I don't want to have any problems going forward. But I think that's ultimately on you. It's going to be your choice whether you want to report that or not. You should probably report it just to save yourself some grief. Okay, I think that was my last one. And I actually told the gentleman I'd answer this question today, so let me make sure I get to it. This is not crypto related, but I'm going to do this and then show you go over the markets here for our last 12 minutes. GS3364 says, do you have retirement accounts? And if you do, any tips? How do you manage trade them? Yes, I do have I have 401k. I have self-directed IRAs as well. I manage them the same as I would any other account. What I do in the retirement ones is I take less risk, so I'm not going to be taking big risks like I am in my gamble account with my Go EVs and my Boyle. But to me, I got to be safe with those. So I don't really have any special rules other than I can't really trade volatile stuff. I got to adhere to stop losses and things like that. But I trade them no different than any other account. It's just the guidelines I put in place. So I manage them, trade them. I'll sell options against those as well. I take sometimes strategies for my 1%. If there's something I'd like to buy and own, then I'll sell puts against it. And if I get exercise, great. But I'm just constantly trying to continue to grow that rate of return in those accounts. No problem, Mark. Glad to help. If you buy and hold it, it's not reportable. Correct. It's not reportable, Carrie, unless you convert it into anything else. So if you bought Bitcoin in 2009, all right, if you bought Bitcoin in 2009, please call me and let me give you a big hug. That is, you deserve a trophy because, wow, biggest gaining asset in the history of financial markets. Anyway, if you bought in 2009 and it's just sitting on your computer, you were a miner, whatever reason, I'll be honest, the IRS probably has no idea that exists. None. If you are holding it today from 2009 to 2024, it's not taxed at all. Because you haven't converted it to anything else. There has been no conversion. Now, the second ago you convert that to Ethereum or Litecoin or RIP, whatever, then that's a taxable event. What if you stake Bitcoin? Do I need to move Bitcoin from cold storage to exchange wallet? Well, you can't stake Bitcoin. Bitcoin is not a proof of stake. Bitcoin's proof of work. Totally different technology. So you cannot stake Bitcoin. So yeah, there's nothing you can do there. But do I move Bitcoin from cold storage to an exchange? Some exchanges, like I just showed you, like Crypto.com, you can you're lending it to them. It's not staking, you're lending, and they're paying you interest on that. So that's what you would have to do. Yep. Proof of, depending on which proof of stake project it is, you can stake from your ledger. I stake 5 different things directly from my ledger right now. All right, let's go to our markets. I'm trying to keep this under a 2-hour show. I didn't mean to go that long, but here we go. All right, start at the bottom since crypto was the topic du jour. We've had 4 consecutive pretty aggressive down days. I'm just measuring off the peak here. Well, about a 16% slide for Bitcoin overall, down 3.85% today. Not the best looking, although if I was to anticipate it stalling and stopping from going further, it's right around the 62,000, and today we hit a low price of 62,485. So I do feel like we're kind of near the bottom end of this. Help that dude that lost 20K. Yeah, Sly, he's got to email me, TraderMerlin@gmail.com. Let me know, see if I can see what I can do. But I need you singing my praises if I get that money back for you. That's it. So that was your worst performer. Again, I expected there to be a pullback in crypto coming just because of the huge surge. I mean, look, from where we are right now, we'll go back to January 11th when that spot Bitcoin ETF came out. Here's the day that the ETF was approved. So we'll go from the opening price there. We're still up. Oh, I don't have snap mode on. That's why it's not working. We're still up right now 37% from that day. I'll take that. I'm happy with that. Keep it going. So yeah, this is a natural expected pullback. No big deal. I have heard people saying it's going to get to 45,000. I don't think so. But stranger things have happened. Our 10-year sold off a little bit today. Again, double topping right at that area where we said it's probably going to have issues getting above. Keep your eye on this. If we do get above that 4.38 mark, call it 4.5, then I think all of a sudden you've got a big jump to 4.6 and more. Actually, I think you're actually looking at 4.65 is that last real big move down. So a little bit of a reprieve there. Our gold and silver was a little bit down today, 0.21% slide for gold. SLV was down, but nice little, it looks like a hammer formation, although it's not really after a big sell-off. You're down 0.52% today on SLV. I almost sold some puts today on SLV again, just to open up some positions that I had closed out, but didn't quite get there. Dollar index up 0.22%. Still trickling up, but the bigger picture just tells me nothing's going to be really noteworthy to talk about until we get above that 105 mark, and we're not really that close yet. All right, almost podium time. NASDAQ was your 4th place finisher at 0.21%, but again, just floundering. Really hasn't made any really big moves at all, especially coming on the heels of this beautiful uptrend. So keep your eye on the NASDAQ. Again, there's nothing for me to say here. It hasn't done much. Crude oil. Oh boy. Still moving up, 0.69% up for crude oil. 82.73 was where it's at. I'm not sure why my lines disappeared, but you look out at this chart, and where do you really see any solid, strong supply? I don't until you get up to $89. That's a $6.30 move up from right here. That would be a pretty big drop in our equity markets. And of course, we have a rate announcement happening tomorrow for the United States. That'll be a big one as well. That was your bronze metal. Silver metal goes to the Russell 2000. Actually had some gain, up 0.46%, but technically there's nothing really to work off of here. And finally, your S&P, which still looks absolutely fantastic, 0.52%, still moving to the upside and rock and roll. Now, one last thing as I flood us with information and content for today. 17 years ago, Japan decided to go negative rates. And I've been talking on this program, I don't know how. I kept saying it's going to happen soon that Japan has to raise its rates. They can't stay at negative 0.1 when everybody else in the world is raising, and they're just going, no, we'll stay at negative 0.1. It changed last night. I don't know if you guys caught that, but the Japanese yen, the Bank of Japan, basically made a change to their currency, and they raised. It's above zero now, but barely. It's less than 0.1%. But remember, they were at negative 0.1, so it's not like a colossal increase, but it is a change for the first time in 17 years. And look what it did to the yen. This is the inverse. So when you see this move up like this, it means that the yen is actually going down. Big surge up. ever since that announcement. I'll put up a 15-minute time frame so you can see when that happened. There it is last night. When they came out with that announcement, all of a sudden the dollar surging again. In theory, it should have gone the other way. I'm watching the Japanese yen increase their rate. You would have expected it actually to go the other way. So you just never know what's going to happen in these damn markets. All right. That is it for content-wise. What time is it? Okay, good. I'm not going to go 2 hours today. Whew. Maybe even 1 hour. Let's go to our economic calendar, refresh that, and we'll show you what's happening for mañana. There's a lot of stuff to talk about, but I'm going to cut to the chase here because I got too much going on. We have a Fed funds announcement. That's going to happen tomorrow at 11 a.m. Pacific time. Right now, expectations are 99% will stay right where we are at. That is going to be fine. What will be of interest, and be careful, it's that press conference 30 minutes after. So at 11:30 Pacific time, an hour and a half before the markets close, I'm going to be watching the statement live as it happens because they are going to grill him about the increase in prices recently. And is inflation, in fact, under control? What are his concerns? What are they going to do if inflation does continue to rise? And I'm willing to bet you that you are going to hear that the Fed he'll say something like, well, we at the Fed are going to have an accommodative stance. The levels of inflation increasing are a little concerning, but we feel that things are under control and we're still targeting our 2% target for inflation. And then some reporter's going to go, but what if inflation continues to surge? Are rate cuts off for the year? Will you increase rates? That's going to be a question that comes up. And he's going to dance around that one by saying, well, at this point, we don't feel that will be necessary, although all options are on the table. At this point, we still see at this stage that the economy is getting better, inflation is under control, and we will most likely taper a little bit later on this year, but that's going to be data dependent. Anything different from that might allude to the fact that they're not going to do rate cuts this year, this market could go haywire tomorrow at 11:30. So be careful with that one. Should be a fun and exciting thing to watch. I always love the excitement of an FOMC announcement. And then last thing we'll talk about here as we wrap up our show and you get to your March 20th is earnings. Here's what we got. Micron Technologies, General Mills, those are probably your two biggest ones. Five Below, which is always a fun store to go in and buy weird stuff. I like the Five Below store. But, grain prices obviously can impact General Mills. That is what's on plate for tomorrow. All right, that's going to do it for me. I got most of the crypto questions out of the way. There were a couple I didn't get to, but I'm out of time here. So thank you guys so much. Hope you enjoyed it. Those that sent in questions, GS and Mark and Arvin, we had Tran, Life on Your Terms, Michael. Thank you guys so much for those questions. Keep sending them in. If you have things that you want to know more about, let me know. You can send them in at TraderMerlin@gmail.com or put them down below any of the YouTube videos. That said, have a great rate announcement because it's going to look like this tomorrow. You're going to have a popcorn market of the day. Take care, everybody. I will see you tomorrow.